I want to show you guys how one little tiny box helps me analyze trades, helps me stay with the trend, and helps me, sort of protect myself. So what we're looking at here is a 5-minute time frame. A couple of things on the chart. I'm looking at initial balance high. I've got the 30-minute opening range low. I've got VWAP, and I've got 20 SMA. Okay. This little box right here is my stop loss box. So what I want to do is I want to find those short-term changes in trends. This is a strategy I've been teaching on YouTube for a long time. It's something that we focus on inside of Evolution Traders. So if you guys want to join and you want to get a part of the live trading or maybe even the mentorship, the links are down in the description box below. But what I want to do here is I want to analyze each and every single trade in terms of risk. And I want to manage it in terms of, where could I get out of this trade with not taking too much damage? And where could I just take a scalp, make a little bit of cash, maybe take 2 or 3 trades a day, in a perfect environment, in a perfect world. World's not perfect, but hey, sometimes we get lucky and things kind of work with us. So let me explain exactly what I'm talking about. What I'm talking about is using this box here to kind of predetermine where your stop is going to be and analyze your risk. So if I was to look at this candle here that closed underneath the VWAP and underneath the 20 SMA, you're going to see it's a pretty large candle. It's a 56-point range candle. Now, I don't want to give up 56 points, so maybe what I'll do is I'll throw a stop loss any closure over the VWAP or the 20 SMA. That's going to definitely tighten up my risk from 688 up to 625, so more so about 35, 45 points here, a lot better than the 55 points. In this particular scenario, what I would be looking at is if I'm going to be giving up, let's say 25, 35 points, I want to make at least half of that. So I want to get into a trade that's going to pay me maybe 15, maybe 20 points. In this particular scenario, you can use this as your stop loss box. As soon as the next candle opens up, it starts to confirm. You can jump into that trade, and this trades from a price of 688 all the way down to 640, so it's a 40-point move. And if you're looking for half of that stop loss box to kind of, gauge where you want to take your profits, you would have hit your PT here before it reverses on you. Now, not every trade's going to work. I want to show you a losing trade. So in this manner here, if I was to put this 40-point box, right, because this candle here is 35 points, so it's technically 35 points. If I was to put this here and say, okay, if I take half of 35 points, I'm looking at, 17, let's call it 17, 18 points. You would get in on this trade over a price of 21,746, and it drives up to a price of 21,758. So this actually only goes up 12 points. So in this particular scenario, unless you have a sub 10-point take profit, like you're a really aggressive scalper, you're more than likely going to get stopped out here. But let me kind of give you a little trick. Let me give you a little tip. Although this trade, technically, if you put your stop loss below this box, below that reason why candle, you would have been stopped out here. If you wait for a candle to close, there's a pro and a con. The con is if it closes underneath, definitely we have to get out of the trade, and we're going to take a little bit of a bigger loss. But if you can stomach the drawdown, maybe by controlling the amount of contracts that you're trading. So instead of trading 1 mini on this and giving up 35 points, maybe we trade like 3 or 4 micros. And in that particular instance, you're only risking about $150, maybe $200 on this trade. And you're kind of looking for that $100 to $200 to the upside, which you're going to see here once it starts to come back around would have paid you out. Now, here's a perfect example of a trade that works very, very nicely with a small stop loss box of about 22.5 points. Now, remind you, we're trading the 5-minute time frame. We're also trading NASDAQ 100. This is going to move like an absolute animal. So we have to adjust to that animal. And normally the way that I adjust is I size down. So I get into like 3 or 4, 3 or 5 micro contracts. I really try to let it close outside my box versus just getting wicked in and out. Here's another scenario here where this is a much larger stop loss here. And if you look at the actual stop loss box, it's going to be about 43 points. Maybe I can tone this down by going to this swing high here. Now maybe I'm giving up about 30 to 35 points. And if I'm looking to take half, I want to make at least half of that, 35 points. Cut that in half. We're looking at about 18-ish points. we would be getting into this trade below 21,731, and it drops all the way down to 21,706. So it's about 25 points here. So again, if you're looking for half of that, what you're giving up, and you're looking to be a little bit more of an aggressive scalper. Now, if you want to keep your win rate a little higher, you can target like 10 to 12 points. And if you target 10 to 12 points, although the trade is going to start off with a much larger risk, when you do make money, you're going to make money more frequently. Now, the question is always asked, well, if you're giving up so many points and you're taking less per trade, doesn't that mean that that's a negative risk to reward ratio and you're going to have trouble in the long run? It would if you are trading like an animal. So what I recommend, and one thing that I try to teach inside of Evolution Traders when we're live trading, when I'm doing my monologue, when I'm doing, you know, my webinars or whatever I'm doing, the teaching that I'm doing or the educating that I'm doing, I try to tell people this. What we want to do, regardless win, lose, or draw, we want our average winning days to be what we would be willing to give up on a losing trade or a losing day. So if I normally average between $200 and $300 profit, let's say that I get into a trade and I happen to lose $300. All that means is I can't trade today. I can't trade anymore. Like, I gave it my best shot. I took one trade. I gave up my entire daily loss limit. Now I have to move along either into another account or move along into tomorrow. Now, where a negative risk to reward ratio gets people in trouble is, let's say they take the $300 loss and they continue to trade. And let's say they take a $100 winner on the next trade. So they're still negative $200 and they proceed to trade and they take another $250 loser. Now you're letting that daily loss limit get way out in front of you to where it's almost, you know, pretty hard to come back from in that one singular day because your take profit and your stop loss is negative. So what I recommend is, again, take your average winning day. If you're winning like $150, $250 a day, that's where we kind of want to keep our sweet spot for our daily loss limit. You can definitely risk that on one entire trade. You can split that up by trading smaller contracts on 2 trades or 3 trades. The choice is yours. But if you guys want to start trading with me and the team inside of Evolution Traders, the links are down in the description box below. Take advantage of it. It's always better to trade with a community and a team and have a little bit of help behind you than to go at this alone. Also, guys, if you need Apex evaluations, you can use code DAnthony. The code is up at the top of the screen here. Make sure to like, comment, subscribe. Let me know if you guys would use this stop loss box for you to kind of help gauge your trades, right? I mean, again, it can help a little bit because it's going to put something visual on the charts where, you know, sometimes things are bouncing against us. We just need to stay patient, right? We need to stay patient a lot of times. I'll see all of you guys on the next video.